you filled out an online application and it tells you can afford to buy a home up to $600,000. You're ready to go, right? No, wrong. There's a lot more to understand about financing your home purchase.
I'm Lynn Wyminga.
And I'm Lorna Willis. We're with the Nadeau Real Estate Group, brokered by eXp Realty. You know, Lynn, the cost of buying a home is more than just that down payment and the mortgage payment. Buyers have to think about one-time costs, which is the down payment, legal fees, land transfer tax, title insurance. The list goes on and on and on.
And then there's the monthly costs, including your mortgage, your utilities, your internet, maintenance, insurance, property taxes.
Exactly. So buyers need to really think through, what can I actually afford, right? Because I find a lot of times buyers start looking at that top end of the market. They might look at what the mortgage payment's going to be, but not really consider those other things. And you know, one of the first things that we recommend when you're looking for a home is, first of all, find a realtor that you can trust and that can guide you through the process. But the second person that we recommend people find is a mortgage broker.
Yeah.
Whether you work with the bank that you've always been with or go to a mortgage broker who can shop around for you, we recommend that you start that early, because nothing's worse than going out, finding the home you love, putting in an offer, getting it accepted, and then a few days later finding out that you can't actually afford that home. And one of the first things that a mortgage broker is going to look at is your debt service ratio. So you've got your gross debt service ratio. This is when I get all mathy.
Yeah.
I get very mathy on this. So
nerdy.
Yeah, so that's the housing costs, right? So the cost of the mortgage, the taxes, the utilities. And that, when you're getting approved for a mortgage, that can't be more than 32% of your gross income.
Right.
So the other thing that's important is the total debt service ratio. So that includes all of your debts.
And some people don't always think about all of the line of credit that they have, or their credit card debt, or
car payments, car leases, student loans, right? So many people, when they're out there looking for a home, are still kind of finishing off the student loans. And that can't be more than 40% of your total income. So even if you're, a person who makes a good income, I strongly recommend, talking to a mortgage broker really early on so that you can start that conversation.
And if you're a math whiz, you can figure that stuff out yourself.
Yeah, and you know what? There are a lot of tools, and we've put some in the link below to help you look at some calculators and things like that. But and then once you're looking at arranging a mortgage, there's a number of different things that you're going to talk about.
Yeah.
So amortization. So over what period of time is that mortgage spread? A lot of first-time buyers try to spread that over 25 years to keep the payments low, but there's a cost to that as well, because you're paying over a longer period of time, you're paying interest for a longer period of time. The other thing is looking at the down payment.
Yeah, and that can be tough, because you don't want to spend every single cent that you have, because you're going to have those closing costs and the possibilities of things coming up. But when we bought our first home, we moved in and had to repair 2 things right away.
Oh, really? So you didn't have a home inspection. Shame on you. And again, the mortgage broker is going to be the good advisor on looking at that down payment, because yes, you can buy with a 5% down payment. Is that the way to go? If you've got more than a 20% down payment, then you can avoid paying CMHC insurance, which can add up to a substantial amount of money.
Absolutely.
And the other thing with the down payment is we know that there are programs through the government for first-time buyers. One that I used, because when I bought my first home, it was a condo in Toronto, and I had the debt and all of that, and I thought, I'll never be able to buy a house. And my banker said, have you considered dipping into RSPs? So you can borrow up to $25,000 from an RSP.
Each for spouses.
So if you're a couple, then you've got your $50,000 down payment, and then that gets paid back over time, right? So over the next, in my day, it was 15 years, you're paying that back over time and not getting the tax deduction for that RSP, but it's a good way to do it. And you can, I did it by taking a loan to buy the RSP, and then the tax return paid back the loan. And yeah, it was so complicated. I was glad I had a good advisor. So again, find a mortgage broker that can help you with that. The other considerations are interest rates. One of the reasons that the market is so hot right now is interest rates are low.
Super low.
Yeah, like again, when I bought my first house, I had a 7.7% interest rate on my mortgage, and I thought I was doing really well.
Yeah.
But a mortgage broker will also advise you on, how much room you have, because they won't always be this low. So you don't want to get into trouble if interest rates go up in a few years. And then, they'll talk about the term of a mortgage. Do you take a 3-year mortgage or a 5-year mortgage? And that's when you try to get out your crystal ball.
Yeah.
And figure out what's going to happen.
What the market's going to do, with the interest rates.
Yeah, with the global economy, who knows? And then whether it's a fixed rate or a variable rate. And, there's lots of pros and cons for each of those. And a lot of times it depends on what's going on in the economy, whether fixed or variable is the right thing. So there's a lot to unpack there, and that's a mortgage broker will walk you through each of those things.
And one of the things that's confusing for people when they first get a mortgage is the amortization and term. So the amortization is the full term, basically, that you're paying off the mortgage, but your actual term, that 3 or 5 years, whatever it turns out to be, is just the rate that you're at now, so it might be the fixed rate that I think we had 5 years at 5%, or the variable. You can do variable for 3 years and see how it goes, right? Feeling lucky.
Yeah, and it really does depend. And
at the end of that term, then you renegotiate.
Right. So one of the things I've learned is, why a mortgage broker. Right, because I'm from Nova Scotia, so I bank at Scotiabank.
Obviously,
banked at Scotiabank my whole life. So when I needed a mortgage, I went to Scotiabank, and whatever they offered me was what I took. And years later, I learned that a mortgage broker will actually shop the banks, they'll shop mortgage companies, and find you the best rate and terms, and guide you through the process of making sure that you've got all the documentation that you need to get approved. So with that, the documentation as well, it's, if you're preparing to buy a home, it's good to start. The first thing you need to be to buy a home is employed.
Yes.
Employed is good.
Get yourself a letter of employment.
Yeah, so your employer will be asked to provide a letter that says that you are employed, how long you've been employed, the terms of your employment. You'll be asked to provide T4 slips, pay stubs. If you're self-employed, maybe past tax returns so that you can establish what your earning is. You're going to be asked to confirm your down payment.
Yeah, and even a recent client was asked for the last 90 days of his bank statement.
Exactly.
Right.
Exactly. So the lenders, they want to see that you've got that down payment. It's in your account. They can make allowances for, if you're receiving a gift from someone, to make sure that that's considered as part of the down payment. But there's a lot. They're also going to want things like your social insurance number, your checking account number. So making sure that you've got all those things in order. Because again, if you put an offer in on a home, you don't want to be scrambling around getting a letter from your employer, things like that, when you're trying to satisfy a financing condition.
And lists of assets. So any of your GICs, RSPs, those
stocks,
are things
investments, other properties that you may own.
Yeah.
So anything that's an asset. Remember, for my first house, I tried to claim my Beanie Babies as an asset, and I just got a bit of an eye roll from the lender. They didn't take me particularly seriously. And some other costs to consider around financing. So there may be an application fee to apply for the mortgage.
Right.
Depending on the lender, they may ask for an appraisal for the property, and that may be a fee to you. And the mortgage brokers may have a fee that's payable at closing. So that's a good question to ask when you're working with a mortgage broker. Where are the fees? Who pays the fees? How are they paid? When are they paid? Very important to ask. Some of the other costs that you're going to have when you're looking at buying a home inspection. And you hear a lot nowadays about unconditional offers going in. If you're buying a home inspection is always recommended. Now,
Absolutely.
You have the option of doing that inspection before you put the offer in. The downside to that is a home inspection usually costs, give or take, about $500.
Yeah.
So you don't want to be doing that 10 times.
Yeah.
But yeah, you should plan for about $500 for a home inspection, and that's paid the day of the inspection. Land transfer tax. So land transfer tax is a function of the price of the home. So you need to be prepared to pay that.
And we'll put a link in the comments for a land transfer tax calculator.
Yeah, and it's pretty easy. I usually, when we have clients that have bought, I usually send the note saying, be prepared, this is what your land transfer tax is going to be. Home insurance, so arranging for home insurance, the house has to be insured on the day it closes. And, and there may be some other costs around that as well, because the insurer may want some things before they'll insure the house.
Right.
Title insurance, so that's part of the closing costs. Legal fees can be, it really depends, if it's a complex closing or what. But again, we tell people to plan for around $1,500, but it really depends on the actual situation. Yeah. How much that's going to be. So,
and then the adjustments are so the lawyers will figure out the adjustments. But it's things like if there was propane tanks on a rural property, then the owner would get those filled, and then you would pay them back for the portion that.
That's right. And the most common one is property taxes.
Absolutely.
Because property taxes are usually due for the entire balance of the year by September. So if you buy a house in October, the seller has already paid the property taxes for the year, so there's going to be an adjustment based on the number of days that are left. And depending on the type of property you buy too, there could be GST or HST. So new homes have HST on them on Ontario, but there are programs available that you can get rebates on that HST. So making sure that you understand that. So it's not doom and gloom, but we do like to make sure that our buyers are prepared for that.
Aware of all these things.
It can be a lot of money, and it can be a bit of a panic because usually you find out the total when your lawyer calls you 2 days before closing and says, come on into the office and bring a certified check for this amount of money. And you can't put that on your Home Depot card.
No.
If you have any questions about financing your home, contact us, and we will answer them to the best of our ability or put you in touch with a mortgage broker who can take really good care of you. If you like what we're sending you, don't forget to subscribe.